All right. So, hello, Doctor. We're from Group 10, and our topic for the discussion is the economic consequences of Brexit. So, Brexit is the short abbreviation for Britain exit from the EU market. So, we'll start with the first subtopic, which is the impact on UK's trade relations with the EU.
Okay, my name is Tanin Wei, and now I am going to discuss about the impact on UK's trade relations with the European Union. UK officially left the EU in January 2020. The UK and EU began trading under a new agreement called Trade and Cooperation Agreement. This deal allowed for tariff-free and quota-free trade, but with significant changes. It introduced new non-tariff barriers such as custom declarations, rules of origin checks, and border delays. These changes disrupted many supply chains and made trade slower and more expensive. Then after Brexit, the imports from the EU to the UK also dropped from 52% to 40%. This decrease shows that the UK is actively seeking alternative trading partners outside of the EU, especially countries like China and the United States. Without easy access to the EU market, the UK has been forced to look further afield for new trading opportunities. Brexit also has made trade significantly more complex and costly. So for many industries, the changes has been dramatic. For example, in agriculture and fishing industries, products like seafood and dairy face delays and now have to undergo health checks at the border, causing disruptions to supply chains. Many manufacturers also have seen their costs rise as they deal with slower deliveries of parts and components from the EU. While the small businesses, they have struggled with the increased complexity of trading with the EU. Some even stop selling to the EU countries because it become too difficult and costly to comply with the new regulations and paperwork. So in conclusion, before Brexit, trading between the UK and EU was easy and cheap, which helped the UK economy grow. But however, after Brexit, new rules made trade slower and more expensive. The trade between UK and EU has dropped, and many businesses face higher costs and delays. Some companies also have moved parts of their operations to the EU. Okay, that's all for me.
All right, now
Thank
moving on
you.
to the second subtopic, which is the effects on the UK labor market and immigration. My name is Akmal Safwan, and the first effect is that the on the UK labor market immigration is the end of free movement. So, before Brexit, EU citizens could live, study, and work in the UK without a visa. But now, starting January 1st, 2021, after Brexit, the free movement has ended. Now, EU workers or students need international visas just like non-EU workers or students. The second one is the new immigration system. The UK introduced a point-based system, which means that in order for you to work in the UK, now migrants in the EU or non-EU, they have to have a set of requirements. First is they have to have a job offer, they have to meet a salary threshold, and they also have to speak English well. So basically, now in the EU, they don't have it easy as before anymore. Now they are the same as the non-EU immigrants. And the third is the impact on the UK labor market. So for the UK labor market, after Brexit, fewer EU workers came to the UK, and this has resulted in labor shortages in key sectors like farming, hospitality. Now, what happened is there's not enough workers to harvest crop, and this resulted to unharvested crops and lead to wastage. Also, wages has been increased to attract UK workers to fill in the gaps. And hiring from abroad became harder and more expensive now after Brexit. Next one is the shift in immigration patterns. The EU immigration dropped sharply. Immigration from non-EU countries has been increased, especially skilled workers from India, Nigeria, and the Philippines, because in my opinion, they have to work harder because they don't have it easy as the EU countries before Brexit. Also, fewer EU students and families came to the UK due to the visa rules and higher costs. So, in comparison with the EU, the UK was significantly more negatively affected than the EU. The EU labour markets, however, stayed strong because they could still move freely between 27 member countries. And there's only a minor effects on countries like Poland and Romania because they don't have that strong trade ties in the UK even before Brexit. So they are not affected that majorly. So in conclusion, Brexit caused a major shift in the UK's immigration system. It led to staffing problems in low-skilled jobs, and also the UK now relies more on skilled non-EU workers to fill in the gaps. And overall, the EU adapted more easily because they're not just a single country, but there are comprising of 27 member countries. That is all from me. Thank you. So now we're going to move on to the third subtopic, which is the economic growth projections post-Brexit.
Okay, hi, my name is Normashita. I will talk about the economic growth projection for both the UK and the EU after Brexit. UK projection for the UK growth is expected to stay low. As of 2025, the economy is growing at around 1% a year, which is much lower than 2% or more it used to grow before Brexit. This slowdown is mostly because trade with the EU become more difficult, more rules, delays, and higher costs. Some businesses even stop trading with Europe altogether, and many investors have held back because of the uncertainty. In 2035, the UK signed a new deal with the EU to ease trade barriers. It helps a bit, but economists say it may only increase growth by 0.3 to 0.7%, so not enough to make a big difference. Overall expert estimate the UK economy is now about 4% smaller than it would have been if it had stayed in the EU. Now, as for the EU, it recovered faster from Brexit since it had other strong trade partners, but its growth is still slow in 2025, around 0.9 to 1.1%. This is mostly due to global issues like trade tension with the US, high energy prices, and economic stagnation in Germany. In short, the UK growth remains low and is still affected by the Brexit, while the EU growth is also slow but for different, more global reasons. That's it for me. Thank you.
Okay, now we'll move on to the fourth subtopic,
Yeah, I'll
which
be discussing about the fourth topic, which is financial service and the loss of single market access. So before Brexit, the UK's financial sector benefited greatly from being part of the EU's single market. British banks and financial firms had passporting rights, which allowed them to operate freely across all EU countries without needing separate license for it. London was the financial hub of Europe, and the sector made up about 10% of the UK's total tax revenue, employing about 2 million people. The EU was also a major market for the UK's financial services, making up more than a third of its total financial exports. However, after Brexit, these passporting rights ended in January 2021. UK's financial firms no longer had automatic access to EU markets and had to set up branches within the EU or apply for special permissions called equivalents, which are more limited and can be withdrawn at any time. Because of this, many companies moved parts of their operations to EU cities like Dublin, Paris, Frankfurt, and Amsterdam. Around 440 financial firms have made such moves, shifting nearly 900 billion euro worth of assets and thousands of jobs out of the UK. While the number of jobs lost is smaller than expected, the impact on the industry is still significant. The Brexit trade deal didn't include much for financial services, although the UK and EU agreed to cooperate and share information. These didn't restore full market access. Since leaving the EU, the UK has started changing its financial regulations to try to stay competitive. This includes reforms to attract investment, boost fintech, and make London more attractive for listening and innovation. Despite these changes, London has remained a leading global financial center and still ranks second in the world, just behind New York. While some businesses have shifted to the EU cities, none have fully replaced London's global financial influence. In summary, the loss of single market access made it harder and more expensive for UK firms to do business in Europe, leading to some job losses and asset relocations. But the UK is now focusing on adapting its financial system to stay strong and independent in the global market. That's it for me.
But now for the last upload.
Hi, let's talk about how Brexit affected the EU and the UK in terms of the big picture economy. First, trade. After Brexit, the EU lost a big trading partner, the UK. At first, industries like farming had problems. But later, the EU can try to trade more with other growing countries. For the UK, leaving the EU had made trading with the EU much harder and more expensive. Now the UK has to find new trade partners. Next, money. The European Central Bank in the EU and the Bank of England in the UK both had to deal with problems. Brexit made things uncertain. The EU might change interest rates if the economy slows down. In the UK, the pound got weaker, which caused higher prices. Both banks had to choose between helping the economic growth and controlling prices. Then budgets. The EU lost money from the UK, so it has to decide whether to ask other countries for more money or cut spending. The UK also has to adjust its spending because of new trade rules and border controls. Finally, workers. The end of free movement of people meant fewer EU workers in the UK and fewer UK workers in EU. Some industries in both places lack workers now. The EU and the UK need to figure out how to get enough workers, either from inside or outside. In conclusion, Brexit has presented both challenges and opportunities for the European Union and the UK from perspective. The EU will need to adapt to the loss of the major member state and find new ways to drive economic growth, while the UK will have to rebuild its economic relationships and places outside the EU framework.
All right, thank you everyone for the fruitful discussion. So as hearing from all of you guys, I think Brexit is one of the major setbacks of the downturn of the economy in the UK alongside the COVID-19 and Ukraine war. And I think we can all agree that Brexit is heavily bad for the UK economy. And that is all from us. Thank you.
Thank you.